So here's something pretty stark for anyone who's ever tried trading.
Hmm.
Somewhere between, 80 and 90% of retail traders, they consistently lose money.
It's a brutal statistic, yeah. And Tom Hougaard, who's a very successful high-stakes trader himself, he argues something fascinating.
Right, he says it's not about the tools or the charts being wrong.
Exactly. It's us. It's a human problem. That's the whole core of his book, Best Loser Wins.
And this isn't just some random theory. Hougaard has decades on trading floors, plus, 2 degrees focused on markets.
And his big takeaway, after all that, is that, well, conventional thinking, the stuff that sounds logical, it actually guarantees failure in trading.
So our mission today is to kind of unpack that. Why fighting your own instincts is apparently the key.
Let's start with what he calls the paradox of the outstanding loser. Because the data he looked at on retail traders is, it's kind of mind-blowing.
Yeah, I saw that. You look at millions of trades, and the average person trading from home, they actually have a pretty high hit rate.
Get this. Around 62% of their trades end up profitable. So they're actually quite good at picking winners, surprisingly.
But that's not the whole story, is it? That's where the paradox comes in.
Not at all. Because here's the fatal flaw. When they lose big. On average, about 78 pips gone on a losing trade.
Okay.
But when they win, they only bank about 43 pips.
Wow. So they let losers run almost twice as far as their winners. They win often, but the losses wipe out all those small wins, and then some.
Precisely. They might be right most of the time, but they fail catastrophically when they're wrong.
So the successful 1%, they aren't necessarily better predictors.
Not primarily, no. They succeed because they are, in Hougaard's words, outstanding losers.
Yes.
They've trained themselves to cut a losing trade instantly.
Without the angst, the hoping it'll come back.
Right. No anxiety, no emotional attachment. They just close it and move on. Failure acceptance is the skill.
Okay, that makes sense. And it leads right into his second big idea, doesn't it? Why our normal human behavior is basically self-sabotage in the markets.
Yeah, he calls it the supermarket mentality. You go shopping, you see something on sale, it looks cheap, so you think, great, bargain.
And people apply that to trading. They see a stock or currency fall and think, oh, it's cheap now, time to buy.
Exactly. And that, he argues, is disastrous. Markets aren't supermarkets. Concepts like cheap or expensive, they just don't apply in the same way.
But wait, hang on. If we ignore value, isn't that just reckless? Aren't we supposed to look for things that are underpriced?
That's the uncomfortable truth Hougaard pushes. He'd say you have to detach from that idea of inherent value. He even points to legends like Paul Tudor Jones.
What was his take?
Basically, if the market's tanking, you sell it. You assume it's going to zero. If it's rocketing up, you buy it, assume it's going to infinity. It demands total emotional detachment from value.
That sounds incredibly difficult. Which I guess brings us to the third point. The real focus needs to be on mindset, not just technical skills.
Definitely. He acknowledges technical analysis, charts, patterns, you need it. It's necessary.
But it's not the differentiator.
Right. He says it's actually pretty easy to learn. Everyone has access to the same charts. He himself uses super simple charts, no fancy indicators, considers his own technical ability just average.
So the edge comes from somewhere else.
It comes from self-knowledge, from how you think and feel when you're actually in a trade. That's the battleground.
And that's where the humanness trips us up again.
Absolutely. We hold on to losing trades because of hope, right? That maybe, just maybe, it'll turn around.
And we cut winners short too soon.
Because of fear. Fear that the profit we see will vanish any second. That pattern is ingrained, and you have to actively fight it. Constant self-analysis, repetition.
So pulling it all together, becoming a consistent trader isn't about finding a magic indicator. It's about embracing failure. Maybe even embracing pain and discomfort.
Yeah, it's working on the mental game, using tools like visualization, setting really firm boundaries like hard stop losses you don't override.
And doing things that feel counterintuitive, like maybe adding to a winning position, even when you're scared, just to break that fear-based instinct.
Exactly. It's about actively fighting your humanness because your instincts are often wrong in this environment.
So, the final thought for you listening, Hougaard makes it pretty clear. Trading exposes every single one of your flaws, your impatience, your ego, your desire to avoid feeling bad right now.
And the only way to break out of that 90% losing group is apparently through a really demanding mental transformation. So the question is, are you willing to be truly honest with yourself and actually do that uncomfortable work, to embrace becoming an outstanding loser?